I told you so regarding the bad inflation numbers and the rise in gold and gold stocks. Well, of course, by Friday, the markets did the opposite of what I was saying would happen. Gold stocks sold off and gold got clobbered. Gold was down $45 or so. Friday was Valentine's Day. I forgot about that. So we got Valentine's Day Friday, Washington's birthday on Monday. But yeah, not a lot of love for precious metals on Valentine's Day. That was for sure. But you got to love the sell-offs if you're a buyer. And I am definitely a buyer.
In today's news recap, gold's rally stalls as silver price hits a brick wall. What's next for precious metals? Gold's run to consecutive record highs appears to be stalling as the precious metal ends the week back below $2,900 an ounce on strong profit taking. While gold attracts the most attention in the marketplace, its sell-off is muted compared to silver's disappointing breakout. Overnight, silver futures spiked sharply above $34 an ounce, hitting their highest level since late October. But the rally proved to be short-lived as prices ended below $33 an ounce. March silver traded at $32.58 an ounce, however. The precious metal is down more than 4% from its Friday session highs. Meanwhile, gold is looking to eke out a small gain for the week, just barely notching a new all-time high. February gold futures last traded at $2,896.80 an ounce, up roughly $10 from last week. Philip Streibel, chief market strategist at Blue Line Futures, said that the sell-off in silver has dragged the entire sector down. He added that while it was exciting to see the metal push back above $34 an ounce because of its volatility, the move was too good to pass up for many investors. Silver has had a great run, and for many investors who bought when prices were below $30, this was a great way to end the week, he said. At the same time, Streibel said that easing geopolitical tensions are sapping gold's safe haven appeal. Before we show you more clips, smash the subscribe button and check out our huge discount on NordVPN, the fastest and most reliable VPN on the market. This VPN service is a perfect fit for smart stackers who want their privacy protected and don't want their data compromised by prying eyes. For less than the price of a cup of coffee, secure your internet access and get 3 free months with our promo. Believe me, the only problem you'll ever have is that you didn't get it 6 months ago. Let's get back into the episode.
People should be buying, I think, silver now more than gold. I do think that what we've seen, if this is the beginning of an unraveling rather, of that gold-silver spread, then that's bullish. Because I think when people start getting bullish on silver, it's because gold and silver are going up. I think it's a much stronger bull market when you have silver leading the way. And I think maybe we're going to be entering that. So at this point, with silver still trading around $32 and gold, near, it's $2,900, even though it dropped $45, it's still barely below $2,900. In fact, it's up, it's up $13 right now on Sunday night. So it's just $28.95. We're only $5 below $2,900. Silver should already be above $50, given where gold is at a minimum. So for now, I would focus on it, and especially with the tariffs looming. There's been articles written, and it's happening. They're not just writing the articles; they're writing about what's going on. But a lot of gold has been coming into the United States, a lot of it coming in from London. And the reason I think you're seeing a rush of imports is to get ahead of these tariffs, because the tariffs would apply to gold. And a lot of the gold that Americans might want to buy is going to be imported. America produces gold. We're the 5th largest gold producer in the world. Number 1 is China, right? They're pretty much number 1 in everything. Number 2 is Russia. Number 3 is Australia. Number 4 is Canada, and then the United States. But if gold demand really picks up, which it should, we won't be able to meet it with our domestic production. And so we're going to need imports. Well, if there's a 25% tariff, who's going to want to pay 25% more for their gold? So the idea is, let's bring the gold into the country now so that we don't have to import it. Well, I would suggest the same thing for our customers at Schiff Gold, right? Don't wait to buy your gold after there's tariffs. That's the worst time to buy it. It's going to be tough, you know? So if you want to have physical possession of gold and silver, buy it now, not only because the price is going to go up, but because the tariffs may go on. And of course, the gold producers are not going to eat those tariffs. Tariffs for sure will go dollar for dollar. So if Trump imposes 25% tariffs on gold, any gold coming into this country is going to be marked up by $25. Otherwise, it won't come in, because nobody in Russia is going to sell gold to America for $1 less than they can sell it in Europe, right? The price is the price. And so if we want to tax Americans $25 to buy Russian gold, then they're going to pay $25, 25% more than what the Europeans are paying for the same gold. So the idea is to buy it now. And the same would be true with silver. Now, I guess if you're buying like junk silver, obviously that's not imported, but that's, when you're buying junk silver, that's a used product, right? By definition, right? You're buying it from somebody who's selling it. But if there's a 25% tariff on silver coming in, that's going to cause a big premium in junk silver, because people buying junk silver, or anybody who's buying, a used silver product that's already in this country, right? They're going to be able to charge more because it's not going to be competing with the new products that are being imported into the country. So the big guys, the institutions, are trying to jump ahead, and they're buying their metal now. I would suggest that, my followers, customers, Schiff Gold, do the same thing, except more so with silver, right? Buy your silver now. Maybe there'll never be tariffs. Well, it's still cheap. You should buy it anyway, even if you didn't have the threat of tariffs.
In today's news recap, JP Morgan and other big banks are flying billions of dollars worth of gold on planes. JP Morgan Chase alone plans to deliver $4 billion of gold this month, according to security filings. Trump's tariffs are already having unintended and somewhat strange economic repercussions. For example, they have led to big banks transporting billions of dollars of gold via commercial planes from London to New York City. The price of gold, which investors tend to buy during times of heightened risk, has been on the rise. Gold futures, contracts for the future delivery of gold at a set price that trade in New York's commodity exchange, have risen 11% this year and closed at $2,909 a troy ounce on Wednesday. The Wall Street Journal reports that some analysts project that future contracts could soon reach $3,000 for the first time. However, following Trump's election and his threat to impose tariffs on Europe, the price of physical gold in London has been trading about $20 lower since early December. Normally, prices in these two markets move in sync because traders can ship gold between them whenever there is a price gap. Banks play a big role in these markets by holding gold bars in London, lending them out to earn returns, and protecting themselves from potential price drops by selling futures contracts in New York. However, banks that had sold gold futures are now facing losses as U.S. prices surged above those in London. Rather than buying back futures at a loss, they have a better option: shipping physical gold from their London reserves to New York to fulfill their contracts. This move allows them to avoid losses on their earlier bets and even make a profit by selling additional gold at the higher U.S. price. This gold rush has triggered a logistical nightmare, with some clients waiting up to a week to retrieve their gold from the Bank of England's vaults. Additionally, COMEX contracts require gold bars to be a specific size, forcing traders to send their gold to refineries for recasting before shipping it to the U.S. Finally, the cheapest and safest way to transport such large amounts of gold is via commercial flights. According to the Wall Street Journal, banks are using security firms to move the gold in armored vans to London's airports. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps, and check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
It's been so stretched where the ratio has been more than 90-1. I was talking about this on the last couple of podcasts. I've been telling people, look, buy silver. And I still think that you should be buying silver over gold right now. Right? Even though I'm a gold bug, silver is really cheap in terms of gold. And so it looked like we were getting a unwinding of that spread. And I think that's what happened. But then as gold started to go down, it cascaded and gold went to down $45 and silver went from up $1.10 to unchanged. Right? I think it ended up the day flat. Now, it still was a gain in gold versus silver. Because, normally, or not normally, but in recent times, if gold was down $45, silver would have been down $1, maybe more. Instead, it was flat. So I think there was some unwinding going on throughout the day, but that unwind caused gold to go down. And it also caused the gold mining stocks to get clobbered. I mentioned we had that outside reversal day on Wednesday, and I thought that meant that we would just be going up from there in gold stocks. And instead, I got it wrong because we got clobbered on Friday. Now, I don't think it changes the trend at all. I think it kind of was a buy the rumor, sell the fact, even though I don't know how many people were buying the rumor. But we did get 4 major gold companies that reported earnings. 3 out of 4 beat the earnings estimates. But all 4 had great earnings compared to what they were earning a year ago. And the price of gold is already much higher than it was when they earned this money last quarter. But I think that, we had a rally. I mean, gold stocks were up maybe 20% or so on the year. Now, compared to where gold is, they should have been up much more than that because they got clobbered at the end of last year for no reason other than Trump winning and gold having a small correction of maybe 7% at max. But that sent gold stocks plunging into bear market territory. But I think a lot of people realized that they were going to beat on earnings. And so when they did beat on earnings, the stocks got sold. But I think that's just a temporary move. I think that probably starting this week, people who sold those stocks are going to be buying them back because the outlook for the gold mining sector, I think, is phenomenal. We're going to get a lot more earnings coming out between now and the end of February. And I would expect, again, the trend to be positive, just like this time. We got 75% of the companies beating. But even the ones that don't beat, they're still going to have substantial earnings growth. I think in some ways, maybe some of these analysts deliberately want to overestimate so that they can punish the stocks when they don't deliver or don't beat those rosy estimates. But even though you have some of these rosy estimates for the current quarter, people are not bidding up the stock price. And again, as I said on the last podcast, they look at earnings 2 or 3 years into the future and assume they're going to be lower because everybody just pencils in a lower gold price, ignoring the fundamentals, ignoring the trend of the last 20 years for higher gold prices. Everybody on Wall Street just assumes that, a few years from now, gold's going to be a lot cheaper.
So what do you think of today's episode? Do you agree with Peter Schiff's prediction that gold will hit fresh all-time highs next week? Are we on the verge of seeing gold break through its previous records, or do you think it's all bollocks? And what about silver? Where do you see its price heading in the short term? Drop your honest price predictions for both gold and silver in the comments below. I'd love to hear your thoughts. Now watch this video right here because it's a perfect fit for you, and I'll see you on the other side.